Jitters weigh on the street as Trump threatens 500% tariffs on Russian oil buyers. The Nifty falls below the 26,000 mark with broader indices underperforming. Metals are the biggest drags with all sectors lagging in the negative territory. Tata Steel posts strong Q3 update with best ever quarterly India crude steel production led by Jamshedpur and Kalinganagar. India deliveries grew 14% while Europe remained weak. Morgan Stanley maintains its overweight call. Tanisha Biotech has completed phase 3 human trials of its key dengue vaccine across 19 locations in India. If approved, it will be India's first indigenous single-shot dengue vaccine targeting all 4 strains, with a market launch expected by 2027. Balaji Mines soars after an eligibility certificate under Maharashtra's package scheme of incentives. The approval entitles the company's Unit 4 mega project to incentives worth 258 crores, providing a positive boost to project economics and cash flows.
Hello and welcome. Good afternoon. You're watching Closing Trades here on ET Now. I'm Harsh Sahita, with me is Shah, and let's quickly take stock of where the markets are. Well, it's another dull day in markets. 25,900 breached. In fact, we are now headed lower, and it's proving to be an increasingly difficult day. Okay, 25,900 not breached. I beg your pardon. Breached briefly, but we've bounced up around 40 to 50 points from that point. So we're okay in that sense. 0.8% lower. Let me quickly try and pull up stocks sectors which are under some bit of pressure. On the Nifty 50 index, you've got Hindalco, ONGC, Tech Mahindra, which are stocks which are reeling under pressure. In fact, it's actually the advanced decline which is pulling down the index as a whole. So while some of the heavyweights have been culprits over the last few trading sessions, today it's just the breadth which is pulling the index lower. So that's of course the primary reason. But outside of that, let's pull up a Reliance which is down another near 2% in trade today. Outside of Reliance as well, a TCS is down 2.7. A Wipro also is down 2.5. So the entire IT pack seems to be slipping, not looking too pretty across the board. In fact, where the Nifty 50 counters are concerned, BEL is the one which is standing out in trade, 1.5% higher. Eternal 1.3% higher. ICICI Bank, well, this has been remarkably resilient. It's up another percent in trade today. In terms of contributories, and that will give us also a sense on how it's playing out. Infi, TCS are the top culprits. Let's pull those stocks up and you'll see what's happening. And Reliance, of course, down 50 points as would be expected. I believe Reliance has now lost 7 to 8% over the last 3 to 4 trading sessions. So under some real pressure where Reliance Industries stock price is concerned. In terms of sectors, let's pull up the sectors as well, one after the other. You've got auto under some bit of pressure, but metals is the top losing sector today. 3% lower on the Nifty Metal Index. Oil and gas is down 2.5+%. Energy is down 2%. PSU banks down 2%. IT down nearly 2% as well. So pressure across the board is what we're seeing in sectors as well. Not a single sector trading in the green for the moment. So clear pressure. Nifty India Defence, if at all any, is trading absolutely flat, but that's the best performing sectoral index today. As flat can get. There you go on the Nifty India Defence Index. Midcap, small caps also reeling under pressure. The Nifty Midcap Index 1.5% lower. The Nifty Small Cap Index also under some bit of pressure. A 7% spike up on the India VIX is what we're also seeing in trade today. That's something you want to keep your eye out on. Within the Nifty 500 basket and broader markets, you'll see Signature Global up down 9%, GMDC down 7%, Hindustan Zinc down 6.5%, JSPL, NMDC, Hindustan Copper, all of these, basically the entire metals complex is under heavy amounts of pressure. HPCL also as part of the oil and gas index. So it's metals, oil and gas which are leading the losses. Niva Bupa, though, on the other hand, completely different zone of its own, 7% higher. Alkylamines along with Balaji Amines, that one also is up 6.5%. Mind you, it has facilities as well as land in Maharashtra, is what our research team told me. And therefore, you're seeing that spike up on the stock price. Trident is the other one, 5% higher. Alok Industries, Inox India. Those are just some of the movers in trade. Solar Industry is also up 2.3%. Lemon Tree Hotels up 2% as well. So those are just some of the bigger gainers in trade today. But again, the breadth is just so difficult. 420 declines on the Nifty 500 to just 78 advances. Kunal, is that what's standing out for you as well? Firstly, good afternoon. Not such a good afternoon.
Not such a great afternoon for the markets, but I would still believe that this is a good zone where I believe the market should hold on to. What has happened in the markets in the last 5 days? On Friday, when the Nifty was at 26,340 levels, the put-call ratio had jumped up to 1.7, 1.8. That 1.6 and above is generally a zone where the markets are extremely overbought. In the afternoon today, when the markets were down to 25,980 thereabouts on the index spot levels, the put-call ratio went down to as low as 0.45. Now, that's a deep oversold territory. So what happened in the last 1 week? The markets trimmed off gains from 26,340 odd mark towards sub 26,000 levels. And now we are at a point where the markets have gone to a deep oversold on the sentiment indicator. And this is a classical sign that we are in for a reversal or a bounce back of sorts for the indices. Still maintain that stance which I discussed in the morning, that if we drop down to 25,950 mark on the spot levels, that's a very good zone for contrarian traders to start entering into contra buy positions. So I think at current levels, we are almost at 25,937 on the index. We went down to 25,888 approximately on the Nifty spot. So I think at current levels, would look out for a contra buy positions on the indices, purely on the fact that we are at an oversold zone in terms of indicators as well as in terms of price levels.
Okay, and Kunal, on the back of that, your picks for this afternoon?
So I'll go with a couple of buy calls. My expectation is that IDFC First Bank, which is one of the top 3 gainers in the price front, I think that stock would head towards a breakout. We are looking at a flag formation on the intraday chart, so we'll look out for 88, 88.5 as a target for IDFC First Bank, and stoppers could be kept at 83.5. And the second would be about Bharat Electronics. I think the defense stocks are getting the second leg of a breakout or an up move. BEL continues to march in terms of its leadership quality, and the stock is just, I think, 4-5% off from its lifetime high levels. So look strong at current zone, would look out for 433 as a target, stop us at 430.
Okay, so IDFC First Bank and BEL looking good to Kunal this afternoon. But which other stocks are in focus on the back of their individual news flows? Rabinder is joining us in the show with a list of just that. Rabinder, good afternoon.
Well, yes, good afternoon, Sneh. So, firstly, let's start with Balaji Amines. The stock is up more than 13%, and the reason behind that is the company has received an eligibility criteria under the Maharashtra government package scheme of incentive, and this will entitle its Unit 4 mega project to the incentive totaling of rupees 258 crores. So, back of this, Balaji Amines is in focus, and the stock is up more than 13% on an intraday basis. Misho is under pressure on the back of the management rejig, where Miss Megha Agarwal, which is a general manager of business and senior management personnel of the Misho, has resigned from her post. And remember that yesterday Misho was also down 5% with the lower circuit on the back of their IPO lock-in period, and today also stock is down approximately 5%. DE Development Engineering is also in focus, where company has received work order of rupees 792.9 crore in the December month, and apart from this, company has also appointed Brahman Prakash Yadav as a chief financial officer. So back of this 2 news flow, DE Development is also in focus. Hindustan Zinc is under pressure on the back of the action in the silver, where silver in the international market is down approximately 9% from the record high, and today also silver down more than 2%. Oil India is in focus on the back of the brokerage note, where Kotak Security has come out with a note on the Oil India, and they have maintained the sell rating and cut target price rupees 275 as compared to earlier target price rupees 300. So back of this, this stock is also down more than 2%. VATAC Wabak is also in focus, where BNK has come out with a note, and they have initiated coverage in the stock with buy rating and target price rupees 2,208, and they expect a revenue to grow at a CAGR of approximately 15.7% between FY25 to 28. So back of this bullish note from the BNK, VATAC Wabak is also in focus, and the stock is up more than 2%. And lastly, if we talk about some of the stock that is under pressure, on that is export-oriented stocks are under pressure, like Gokaldas Export, Pearl Global, Avanti Feed, and Apex Frozen, ahead of the Trump tariff hearing in the Supreme Court. And the current tariff in India is 50%, and all of these companies have an exposure of more than 50% revenue comes from the US. So back of this export-oriented stock is also under pressure.
Okay, Ravinder, thanks so much for taking us through that. Yes, the big tariff hearing on Friday in US time, of course, that outcome is going to be out on whether Trump's tariffs hold. The Supreme Court outcome, at least we're expecting the verdict to be announced. And on the flip side, the freshest comments coming in from Trump saying that on the Russia bipartisan bill that they're thinking of passing, wherein they're going to be putting sanctions not only on Russia, but also the countries that are trading with Russia that we had highlighted in the morning, India and China. The bill is particularly aimed at that. So yes, that's the reason why some of these export-oriented stocks like Gokaldas, Apex Frozen, Avanti Feeds, so basically your textiles, your shrimp and chemicals, basically your outward-facing sectors, they are slightly under pressure. But another pocket that's seeing some massive profit taking today is the metal space that has been doing so well this week so far. But today almost a 3% cut coming in on something like a Hindalco. You have some other metal constituents that are also seeing some deep selling pressure. Ashesha is here with a roundup on the metals. Ashesha.
Well, yes, Nifty Metal Index today is down in excess of 3%. That's the biggest fall that we have seen in the last 9 months. It's the biggest fall since April 17, 2025. And several stocks continue to bleed within the Nifty Metal Index. Something like Hindalco, that one is the biggest loser from the Nifty 50 pack, down nearly 3.5%. We have Jindal Stainless down 6%. Hindustan Zinc, Nalco, Hindustan Copper, all of them are declining anywhere between 5 to 6% in trade today. And the main reason for this is Bloomberg commodity rebalancing of their indices, especially because of the run-up that we have seen in global commodity prices. Something like aluminium, that one is up 17% in calendar year 2025. Copper has seen an uptick of 40%, and global indices are likely to be rebalanced. This is likely to happen from the 9th of January to the 15th of January, and the maximum weightage of all of these commodities will be 15% each. So because of the run-up, these indices and these commodities have likely breached that particular 15% threshold, and that is the reason they are likely to see some bit of selling pressure, and hence all of these commodities continue to trade with losses today. Citi, in fact, has come out with a report, and they say that silver in particular could see an outflow of about $6 billion US. That's Citi futures for you, that's silver futures for you. So yes, on account of this rebalancing, all those commodities which have shot up are likely to see an outflow. And on the flip side, something like oil, that one declined nearly 18 to 20% last year. So in that we could see inflows, and that is the reason we are seeing some bit of rejig in the commodity market globally, and that is having a bearing on Nifty Metal Index here. Now, we spoke to Aditya Velekar earlier in the day, and he says that fundamentally nothing really has changed. This is a technical adjustment, likely to be a temporary phenomena. It is likely to reverse in some time, but he also said that the dip in the stock prices currently is a buying opportunity. Fundamentally nothing has changed, but of course third quarter is likely to be a soft quarter on account of lower steel prices in the quarter gone by, and account of lower commodity prices as well. But yes, that's the adjustment that is taking place in the global market. Commodity adjustment, commodity annual rejig of their weightages, and that is the reason Nifty Metal Index is under pressure today.
I think it means we have seen the kind of rally in metals, and the valuations were factoring in the bull case scenario. So any dent in the prices, any pullback or retreat in prices would have been naturally led to correction in the stock prices. So that is what has happened. So what happened is that in the commodity space, there was a rebalancing activity. So silver and gold, so all these, because of this rebalancing of the commodity index, there is a technical the correction in the underlying commodities. So based on that, there might be some volatility in the near term also. Also, fundamentally, the news, macroeconomic news flow coming out of US is mixed. So ISM services index has come stronger. So there is kind of a debate whether Fed will cut rates in the next in this calendar year.
Okay, and So that's one part of what's playing out in markets. But Q3 updates is the other piece. Tata Steel has come out with a very strong Q3 update. Europe business has come in weak, but led by factors which are largely known. How has the domestic business fared? Ashesha here with all of the details, because there was some strength there, Ashesha.
Well, yes, Tata Steel clearly had reported strong set of operational data, especially for its India operations. The stock, of course, is under pressure today on account of the pessimism that we are seeing in the global commodity market that is also weighing heavy on the Nifty metal index today. But India operations showed resilience in the quarter gone by, much like what it has shown in the last few quarters as well, where domestic production saw an increase of about 12% on a year-on-year basis. This was aided by higher production at both of their key plants. One is Jamshedpur plant and the other is Kalinganagar plant. India delivery volumes also saw an increase of 14% on a year-on-year basis because the domestic demand environment continues to remain very strong. Now, as far as Europe operations are concerned, remember Europe has reported weak set of numbers, but largely on expected lines. One, Netherlands, that one has reported a weak production and delivery growth. In fact, it has reported a decline in deliveries in the quarter gone by of about 9%, and this was on account of seasonal weakness and general market dynamics, which was not in favor of the company. UK deliveries have also declined by about 9%, but that is because they have transitioned from the traditional blast furnace to the electric arc furnace. So both their production plants were shut in the quarter gone by, and hence sales have declined by about 9% YOY. Now remember, steel prices have started rising off late, and hence analysts believe that perhaps the worst could be behind us as far as steel prices are concerned. In the last week of December, steel prices have started rising. The trajectory has continued in January so far and perhaps is likely to continue going forward as well. But remember, third quarter earnings for ferrous companies are likely to be muted because steel prices have started rising only in the last half, in the later part of December. Before that, steel prices were muted, so realizations and EBITDA per ton for ferrous companies are likely to be on the softer side for the third quarter. But yes, today Tata Steel has reported strong set of operational data. India operations continues to show resilience, but remember, the stock is under pressure on account of weakness that we are seeing across the board, not just the metal stocks.
Thanks so much for taking us through that. So it does seem like the market pressure has gotten to Tata Steel also about 1.7% lower as we speak. And it's the overall tide of the index that is keeping a lot of the stocks that even have positive news flow today under some pressure. On that note, we'll step into a very short break and get a technical view on some of these stocks just on the other side.
Welcome back, and thanks for staying with us. We're joined by George Joseph, who's the CIO and CEO of ASK Investment Managers. Welcome, George. Let's start off by contextualizing how you're seeing 2026, and in this uncertain environment, how should one look to kind of place their bets?
Thank you for having me here. It's an interesting time in markets. The global uncertainties are weighing, and a lot of good measures from the government has come in the previous year. What we are seeing is that in the valuations in the large cap space, especially Nifty 50 companies, are looking extremely attractive, and it is probably one of the cheapest point relative to mid and small caps over the last 2 decades. And that looks very interesting to us. And so all our portfolios, what ASK manages for our clients has been skewed towards this view. That is broadly I would like to talk about the markets.
George, hi, good afternoon. Talk to us about what your expectation is from the earnings season. We're kickstarting the earnings season next week, the Q3 earnings season, that is. Where do you think leadership could emerge in the market going ahead? And perhaps, is this the quarter where we see some sector churn happening?
Definitely, yes, because many things have happened in the previous quarter. One is INR has depreciated dramatically, and in the same case, we have seen that there is a good amount of turmoil developing in the US markets. When it is talked about the AI wave, whether it is dying down or not, but the breadth is definitely moving towards a few names in US, especially when it comes to the earnings growth. And that is the same case for, when we look at the market participation as well. So the breadth is significantly deteriorating, which is concerning globally, which means that there is more pressure in the markets from the global standpoint. In that backdrop, when you look at the earnings in India, the tariff deal is not yet done, and people were all waiting for that. And at the same time, that is getting prolonged, and you are seeing there is a good recovery cycle that can kick in from the domestic economy oriented sectors, be it banks, auto, and other consumer related businesses. That will be the more highlight of this quarter. But at the same time, what we have to remember is, there are a lot of measures which has been taken by the government and RBI in terms of rate cuts, in terms of GST cuts, and so on and so forth, which also will start playing out in this year. So in my view, and what we believe when we are looking at our clients' allocations, this is a time to look at some of the high quality names in the large cap space, which we can place our bets on. And that's where the recovery cycle also is going to be predominantly beneficial from the earnings cycle perspective. So we are very bullish on the financial services space, especially banks and large private banks, as well as some of the NBFCs, where the benefit will flow through ultimately. And also when we look at the cement companies' valuations, last quarter was a washout quarter, and there could be green shoots visible from this quarter as well. So we look at from valuation perspective, we like these two pockets the most, but at the same time, in terms of business cycle, we like more of India-centric domestic cyclical, that be it real estate, engineering, capital goods, energy transition, all these becomes a good long-term theme to play from Indian context.
Let's unpack that a little bit, George. Let's talk about energy transition as one of those themes, and especially interests me because it's a decadal theme. How do you play that? And do you have enough comfort in terms of the valuations and some of the plays with regard to energy, especially new energy?
Yeah, some of the not specifically new, if you look at from the entire energy transition space, we can look at, be it some of the beneficiaries of the, the new energy companies, and as well as the intermediaries are also very interesting to look at. So every sector, when we look at what we do is we look at the major beneficiaries and the second derivatives and tertiary derivatives, which can benefit out of it. When we look at from that perspective, there are many companies to play on. But at the same time, it's a highly volatile sectors, be it manufacturing, engineering, capital goods, and all these are highly volatile sectors. But that is a cycle we are in. I would relate to it is not at the same fashion at which what we have seen between 2003 to 7, but in some shape or form, this is looking to me very similar to that, at the backdrop of low China growth and low India growth kind of scenario. But the cycle is more towards this specific domestic cyclical themes. So there are a few pockets where we like at this point in time, and we are betting our clients' money on that.
Okay. And George, what is your take on metals? And I ask this given the fact that gold prices continue to be volatile, but we're seeing a little bit of profit taking in silver prices. But then again, they spike up once again, so volatility over there as well. On the back of that, where do you believe Nifty Metal as an index is headed?
So the metal index in the last 5 years has already gone up 6 times, and it is a massive rally, and that was the best performing sector in 2025. And what we believe is that some sort of breathing time is required for the sector to come back to normalcy in terms of valuation as well as in terms of expectations. So we are almost zero on exposure towards metal companies, and differentiating between metal companies always a tough task. Steel company is a steel company after all. But at the same time, we can look at some of the beneficiaries or the companies which are related to more value-added commodities. That's a place where we like to bet on. But as we speak, the commodity exposure to our clients' portfolios are significantly low.
Okay. George, you suggested that SMIDs will likely outperform as well because we've seen a bit of a correction in terms of valuations. How do you expect the performance, and in what pockets do you believe that the performance will be the strongest?
No, I don't know whether it got it wrong. I didn't mention that SMITs will outperform. What I mentioned was the large caps is a space to be in. It is looking very, very attractive to me. I am more of a mid and small cap guy all through my career, but ultimately we have to look at where the clients can make money. So from that perspective, even after this good correction in many stocks, what we have seen in SMITs, to me, the large cap space is the place where you can make good returns, especially say private banks, large private banks look very interesting. Some of the NBFCs are looking very interesting. Cement companies are looking interesting. So there are many pockets which you would like to bet on in the large cap space, and Nifty 50 companies in particular. To my mind, it is trading at many companies are trading at record low valuation related to the mid and small cap. So I will be significantly circumspect on the valuation even after this correction in mid and small cap. But earnings growth will be a benefit. We will look forward for how the earnings recovery will play out in the mid and small cap space, which to my mind it will be more surprisingly benefiting the large cap space itself. So our bets are on large caps.
The bias continues to remain on the larger end of the market. George, on that note, we'll let you go. Thanks once again for speaking to us. Lovely to have you on board.
Thank you. Thank you.
Okay, viewers, with that, time to slip into a very short market. Just taking a look at if there's been any recovery from the day's low for the index. We're around that 25,900 mark, pardon me, and now seeing a further decline. Seems tough to be holding on to the 25,900 mark to an about 1% cut on Nifty. Nifty Bank on the flip side looking slightly more resilient, about a 0.5% cut on that index. India VIX continues to spike up and the advanced decline ratio is continuing to get worse in the sense that it is continuing to skew more towards the declines and as more stocks are slipping into the red. That is what the market breadth is looking like right now, and about a 1% cut on the Nifty. Time for a short break. We'll be talking more about the way the market is moving on the other side.
Welcome back. We're joined by Arpit Beriwal, Manager, Derivatives Analyst, Equity Research at Motilal Oswal Financial Services. Arpit, great having you. How are you viewing markets? We've seen a bit of a cool-off. Opportunity to buy, you reckon?
Very good afternoon to all. So before starting with the markets, one thing that we have to see is they've seen a very good spike in India VIX, almost 7.8% high after a very long dull phase in last couple of weeks time. So look at the structure on the Nifty and Bank Nifty. Nifty definitely made a new life high this week, but since then we have seen some selling pressure at the higher levels, and today we have seen quite weak market breadth. So looking at the structure of Nifty, particularly Nifty is trading in a broader range between 25,750 to 26,350 levels. Now Nifty is again back to its nearest 50 DEMA support near 25,800, 900 levels. But the concern part is that it is still forming lower as lower lows. So till it doesn't surpass the previous day high, a stance would be a mixed setup with upside cap. Levels to watch out for would be 25,800 and on the upside 26,000. A decisive close above this levels will definitely set the setup for the fresh next up move. 25,800 is a major support zone on the downside, whereas on the upside 26,000. So better to wait and be very selective. till it holds below 26,000 levels, our bias would be negative. Talking about Bank Nifty, so Bank Nifty has been relatively outperformer so far. Today we have seen some cooling off from high levels from 60,000 levels, but ICICI Bank and Kotak Bank is relatively outperforming, because of which there is a slight betterment in Bank Nifty. So with the setup wise of Nifty to Bank Nifty is relatively strong as compared to Nifty. So if you want to play on the positive side, our stance would be positive on the Bank Nifty with major support around 15,500. Upside move can be seen to a 60,000, 60,200 levels. For Nifty, it's better to wait until it holds below 26,000. Better to adopt a sell on bounce stance for next few days.
Okay, so that's the way one should be approaching the market right now. But Arpit, hi, good afternoon. In a market like this where we've seen some pullback, where are you seeing buying opportunities, if any? Is anything looking attractive this afternoon?
So overall, the theme has been start of the year is stick to selective outperforming sectors and outperforming stocks. So our likes would be stick to heavyweights. So from the gold space, we would like to continue to go with Titan. First preferred pick would be Titan. So a classical range breakout on the weekly and the monthly setup. Yesterday, with a very strong commentary, the stock opened gap up, holding a life high territories near 4250 levels. So from here on, we are sensed that the stock can continue to head higher towards 4400, 4500 plus levels. So Titan would be a first pick with in spite of market volatility. This would be a best preferred pick with keeping stop loss of 4100 for an upside move towards 4400. Second would be from the pharma pack, and the huge outperformer counter is Torrent Pharma. So if you look at the overall setup wise, pharma space, Torrent Pharma has been a huge outperformer. A classical monthly range breakout above 3950 levels, forming higher as high low structure on the weekly scale, gave a range breakout after above 3900. Today there's some cool off, but the bigger trend is positive. So it's kind of a buy and dip counter. One can go long near 4020, 4030 with keeping stop loss of 3900 for an upside move towards 4250, 4300 positioning.
Okay, so Titan and Torrent Pharma looking good, but let's shift focus and talk about some stocks that are trying to still beat the market move on the upside. And given the way the market is doing right now, lots of pressure on the market, but some pockets are still managing to hold on to gains. One of them is Panacea Biotech. The company has completed phase 3 human trials of its tetravalent dengue vaccine, which is dengue all, across 19 locations in India. The study involved over 10,300 participants with 2-year monitoring underway, and the stock, amid a market like this, is up 11%. Meryl is joining us with the details on what is keeping the stock abuzz in trade today. Meryl.
Well, yes, Panacea Biotech has just completed its phase 3 clinical trials across 19 locations in India. This is for its dengue vaccine candidate, dengue all, in India, and over 10,300 participants were involved in the phase 3 trials. Now, dengue all will be India's first indigenous single-shot dengue vaccine, and it is expected to enter the market by 2027. It has been in the making for over 15 years, and it is made with the precision to counter all 4 types of dengue with only one shot. Now, before this, the 2 main dengue vaccines were the 2 globally available, but only one is now globally available, and even that requires 2 shots. Now, this is a big deal for the company since India has already seen over 1 lakh cases from dengue in 2025 and over 95 deaths. So even on a business note, but from a medical standpoint as well, this is a very big news for the company. And this is why the stock has also reacted in this way, with the stock almost up 8 to 9% in today's trade.
Meryl, thanks so much for taking us through all of those details. So yes, let's pull up the stock 11% uptick on Panacea Biotech as we speak. Arpit, your take on some of the pharma counters right now, some profit taking on Nifty Pharma as well. Tell us, what is your take on which stocks are looking good? Yesterday, Cipla was the top Nifty loser. Do you believe it now looks attractive on the charts?
So if you see overall Nifty Pharma Index is in strong uptrend, consolidated with positive bias. So look at the setup wise. If we look at the outperforming counters, first we'll talk about the outperforming. So as we already discussed, Torrent Pharma and Laurus Lab are preferred picks. So look at the setup wise. Torrent Pharma, we already shared the view that stocks look good for next 8 to 10% upside move towards 4300, 4400. Second from the pharma space would be Laurus Lab. So stock is in clean uptrend. We have seen good rally from low levels, but the structure of higher rise ILOs is intact from last 3 to 4 months. Weekly scale also it is moving higher. Daily scale it is consolidating, but definitely the base has shifted higher from 1000 levels to 1050, and slowly steadily the stock can definitely head towards 1150, 1200 levels eventually. But talking about Cipla. So yesterday we have seen a very stark contrast between the setups such as pharma space where certain counters are underperforming. And if you look at the setup of the weekly scale for Cipla, so definitely a big bearish candle has been formed. Yesterday also there was some selling pressure. Today there is no follow-up buying. So it's, I think, better to wait till it doesn't surpass above 1480, 1485 levels. It would be kind of an underperforming counter. So better to avoid and stick with the outperformers within the pharma space.
Okay. The other two which are within that pharma chemicals pack which are doing very well for themselves today is Balaji Amines and Alkyl Amines. Let's talk about Balaji because that's likely the trigger even for Alkyl. It soars after an eligibility certificate under Maharashtra's package scheme of incentives. The approval entitles the company's Unit 4 mega project to incentives worth around 258 crore plus some electricity subsidies and the like. Meryl joins in with the details.
Well, yes, coming to that, the Maharashtra government has granted incentives of up to 258 crores for the Balaji Amines Industrial Promotion Subsidy for the expansion of its facility falling under a mega projects categories. Now, under this, the benefits that the company gets is 50% of SGST payable on the sale of eligible finished products in the state of Maharashtra are exempted. Then there's electricity duty that's exempted and also 100% of stamp duty exempted. And the incentive period for this for the company is up to 7 years. So starting from 1st Jan 2024, when the company was classified as a mega project and up until the 31st of December 2030. Now, this subsidy is provided usually to reduce India's dependence on imports for these crucial chemicals. And the facility under question is the one where the company is undertaking a 750 crore capacity expansion plan, and it is supposed to be commissioned by the end of this year, that is September 2026, to the second unit of this facility being commissioned in December 2026.
Okay, Meryl, thanks so much for taking us through that. So yes, Balaji Amines, another stock amid a very weak market that's up 10.5%. But while we're talking about some pharma names today, let's focus on the Wockhardt Group. Earlier in the day today, we spoke to Mr. Habil Khurakiwala, the founder and chairman at Wockhardt Group. Listen in to what he had to say over the company's plans for their latest drugs and much more.
Opportunity in terms of total incidence is about 150 to 200,000 patients. And that will get translated as a total opportunity is $1.5 to $2 billion. But we would certainly be able to capture something like 20-30% of this opportunity. See, Zenic in India, we have actually applied much earlier than USFDA, about last March. And it is still under the process. They just started reviewing after 9 months. So we expect that the India approval should come more or less at the same time we get the US approval. If you exclude the debt the promoter family has put into it. So it's only a question primarily of family debt and some other debts. So our debt equity ratio is pretty low, less than 0.5 or so. So that is not our immediate concern at all. And I think we are more focused at this point in time on building this business in India and other parts of the world. And that is something which we'll review it in a later part of the year, whether we have to do anything to reduce debt or it will it will get reduced over a period of time.
Welcome back, and moving on to another ET Now exclusive. The centre is likely to receive at least 10% higher dividend from PSUs compared to last fiscal year. My colleague Prakash joins in with all of the details that he's picking up. Prakash.
Well, that's an important development coming in. We are learning it from our government sources that the government is expecting higher dividend from PSUs in FY26 compared to last fiscal year. In fact, they are suggesting that they're expecting at least a 10% higher dividend from PSUs in FY26 compared to last year. Sources indicate that the government's share in PSU's dividend may cross rupees 80,000 crore in FY26, which was rupees 74,000 crore in FY25. Along with that, as per the data, the government has collected approx rupees 50,000 crores so far in the current fiscal year in terms of dividend from PSUs, and they're expecting these numbers to grow further. And the overall dividend distribution by PSUs may also be higher than the last year, which was rupees 1.2 lakh crore in financial year 2025. Along with that, the government sources are also reiterating that they're insisting on effective implementation of fair dividend distribution policy, where PSUs have proved themselves to be role models in terms of higher distribution policy. When it comes to disinvestment receipts, sources indicate that any shortfall in disinvestment receipts is expected to be offset by higher dividend collection this year. And they are highly dependent on IDBI bank disinvestments, and they're expecting that if there is any shortfall, despite high IDBI bank disinvestments, that could be offset by higher dividend collections this year. Back to you.
Okay, Prakash, thanks for taking us through all of those updates. So yes, that's an important development on some of the PSU stocks that Prakash was talking about. In fact, this is going to reflect on some of the PSU stocks as well. But just shifting focus, we've got numbers coming in from transformers and rectifiers, and the first take is that it's a very weak set of numbers coming in from the company. The consolidated revenue has come in at 737 crores, which is an uptick of 32%. The expectation here was roughly 780 to 790 crore rupees, so a miss over there. Consolidated PAT at 74 crores versus an estimate of slightly higher. We were expecting this number to be around 110 crore rupees, so a miss on that front as well. EBITDA has seen an uptick of 50.5% on a year-on-year basis, but has still missed estimates. The consolidated EBITDA figure is at 125, and on the flip side, the consolidated EBITDA margin number, yes, has seen an uptick of about 211 bips on a year-on-year basis at 17% compared to 14.8, but the street was expecting this number to be closer to 18 to 18.5%. So this 17% margin also looks like a big miss on transformers and rectifiers. A little bit of a spike, if you could call it that, when the numbers came, but once the street started digesting what these numbers are, the stock has taken a nosedive. 2.5% lower is where transformers and rectifiers is. We also have news that there has been a management rejig in transformers and rectifiers. Mr. Satyen J. Mamtora has been appointed as the MD and CEO with effect from today. So that's two news pieces coming in from transformers. First, on the back of their updates looking weak, and second, on the back of this management rejig. Kunal, a quick chart check on transformers and rectifiers, up about 2% this month so far. It's been only 8 days in the month, but let's pull up a slightly longer long-term chart. It's up about 27% in the month gone by.
Yeah, so I think it's done reasonably well in the short-term time period also. And I think looking at the charts trading about 300 plus levels, looks like that maybe the stock is trying to form a near-term bottom for itself. 280 to 85 seems to be a decent support for the stock over the short-term time frame. I'm not sure whether the stock would probably retest those kind of levels, but I think for a better risk reward as well as a buy, a 280 to 85 zone could be a very good zone where traders could look at a contra buy.
Okay. Sunil Subramanian joining us as well, founder and CEO of Sense and Simplicity. Sunil, how do you play the electricity power theme? Do you play through the ancillaries, through the EPC companies, through the financiers, through the power gencos? How do you play it?
EPC and financiers are my key bets of the lot. Because I think ultimately financiers will benefit a lot. And I think the EPC contracts are going to be the executors. And I think that's where the higher operating leverage comes to play.
In terms of preferences?
I can't talk stock specific. So.
Okay, sure. Understood. But financiers and EPC companies, that's how you would play it.
Yes.
All right. And Sunil, how would you play pharma in this market? Because that's another very interesting play. There's the whole buzz around semaglutide, GLP-1 opportunity in terms of the unlocking, and then you also have a large part of the CDMO opportunity, which opens up to a lot of pharma players. How do you play that?
It's not just these two, right? You still have the generics part and the domestic
Yes.
pharma part. So let's look at it as a four-part puzzle, right? And in that four-part puzzle, clearly the high growth, but partly set off by high valuations, is the Ozempic semaglutide opportunity. The stable opportunity with the consistent growth is the domestic pharma. The generics and the CDMO parts are the ones which are more exposed internationally. There, you not only have to look what the US is going to do with us, but also about how the currency is going to behave. So I think that allocating, I would say, maybe 60% to the domestic and to the semaglutide opportunity, and splitting the balance 40% tactically between generics and CDMO is the way I would play it.
Okay, so that's your take on pharma. Sunil, hi, good afternoon. Talk to us about the markets in general and overall sentiment in the market. What are you picking up? Because this is going to be the fourth consecutive day, at least, I mean, in the week since the beginning of this week, we've only seen pressure, and that pressure has intensified much more. Does one read this as a sign of weakness in the market, or should you be looking at the glass half full approach and think of this as a buying opportunity in the market?
It depends on the outlook is for the year or for 3 years or more. I think that what's happened is that it's clearly that while we had a good start to the new year, the later parts of the week have not been great. So what this tells you very clearly is that FIIs, when they are going to reallocate the money, they probably will come in from mid-January. So they are still nervous about India from valuations, growth perspective. So FIIs are yet to make a strong comeback. In fact, the net selling continues. Similarly, DIs also are waiting for the onset of the earnings season to decide where to allocate their cash. So they wouldn't be doing much fresh buying today. Now, along with the halfway through the earnings season, you will have the budget come in and that analysis kick in. So it's a time when fund managers would rather sit on cash rather than go and fully deploy, because we want to see how these two cookies crumble, both the earnings season as well as the budget. So after the mid of February, when you've digested the budget and a lot of the earnings have come in, is when you make your fresh tactical allocations. Now, that necessarily doesn't mean that the FIs are also going to jump in. For the FIs, there's a lot more at play in terms of looking at the complete earnings season and then taking a call on whether the earnings are justifying our elevated valuations, which are still elevated. So FII return would probably take a little more time for them to understand, because the GST impact, right, will play out even this quarter only in the auto side. It's only with the summer that you will see the consumer durable aspect play out. And people would rather wait and see whether it really leads to a large jump in volumes, and then there will be a real estate play. So since the GST effect is going to play it out through the year, right, people will be keeping tactically higher cash balances and then deploying it. So from the year perspective, I would see it as a year of two halves. The second half will do much better than the first half, but whether that recovery will be enough to deliver a fabulous return this year from equities on a one-year basis, it's 50-50. So I would say that remain cautious, to be on the side of large cap for the first half of the year and stay staggered through your approach and diversified is a better bet, because on top of it, you have the overhang of the trade deal and now 500% tariffs being talked about. So there's a lot of uncertainty in the air from this year's perspective, but the year should end well. And this year is a year where probably you allocate well and reap the rewards in the following years. So I would say that's why my outlook on the market is, from a short term, it's a very tactical, very nose to the ground kind of a approach for this year, but stick to the longer term stories which are clearly developing from an investment perspective.
Okay, so that's the advice on how to approach the market right now. On that note, we'll slip into a very short break. Nifty continues to be under pressure right now, but at least we're floating above the 25,900 mark. 25,914 is where we are at, to be precise. Time for a quick break. More news and updates and more market chatter on the other side.
Gold and silver fall for the second day, with investors bracing for an annual rebalancing of commodity indices that could see futures contracts worth billions of dollars sold in the next few days. Citi estimates $6.8 billion of silver futures could be sold as a result of the rebalancing.
Oil edges higher as traders digest more measures from the US to exert control over Venezuela, including a plan to indefinitely manage future crude sales and the seizure of 2 more sanctioned tankers. Brent now trades above $60 a barrel after losing 3% over the previous 2 sessions.
Nickel steadies after a period of volatile trading as investors continue to bet on risks to output in top supplier Indonesia. Their month futures held near $17,900 a ton, about 7% higher this week, near a 19-month high.
Palm oil continues to remain volatile as stronger Chinese vegetable oil prices and expectations of a further increase in Malaysian stockpiles affected the market. Reserves in the world's second biggest grower of the tropical oil are likely to climb for a 10th straight month in December to reach to the highest level in 7 years.
The S&P believes that the race for artificial intelligence and surging defense spending are set to intensify a projected shortage of copper as producers struggle to expand. Copper, remember, has soared to a record high above $13,000 a metric ton in London, driven by a slew of mine outages and trader moves to stockpile the metal in the US ahead of possible Trump tariffs.
Welcome back to Closing Trades. Let's get a little stock specific. And yes, while the market breadth overall is weak, there are select stocks that are falling on the back of their lock-in period opening. Yesterday, that was the case with Meesho. That put Meesho under pressure of 5%. Today, it's the case with LG Electronics as well as Kryzac. And of course, 5 companies, including those 2, are going to be in focus between today and tomorrow that are going to be seeing their lock-in period opening. So you have Rabinder here with more details on that. Rabinder.
Well, sir, today and tomorrow 4 IPO lock-in period is ending. So firstly, let's start with LG Electronics, where LG Electronics today is already under pressure on the back of the IPO lock-in end, where companies 3-month lock-in for the 2% of equity translating into 1.52 crore share with an estimated value of 2,203. 13 crore will end today, and apart from this, Kryzac also 6-month lock-in period will end today with 60% of the equity of which is equivalent to 10.49 crore shares valued at 2,969 crore. And remember that yesterday Meesho was also under pressure on the back of their IPO lock-in period, and where Meesho was down 5% with a lower circuit yesterday's trading session. And if we talk about the 2 stocks that can be in focus tomorrow on the back of their IPO lock-in, first is Nefrocare Healthcare Services, where company will see a IPO lock-in and of 2% of the equity, which translates to 0.19 crore shares with approximately 92 crore. And also on January 9, the Bansal Wire Industry will see a lock-in IPO lock-in expiry of 20% of the equity amounting to 3.13 crore share with a value of 970 crore. So back of this tomorrow, this both stock can be in focus: Nefrocare Health Services and Bansal Wire.
Okay, thank you so much for that, Rabinder. Arpit, let me come to you with regard to a HUDCO. The stock is down 4%. Talk to us how this one is looking like on charts.
If we see overall the broader market, we have seen quite sharp sell-off across the broader market. Now, talking about the overall HUDCO charts, weekly setup, the stock is broadly trading in a range between 205 to 240 levels from last almost 6 to 8 months. On the immediate basis, if we see, the stock has given a breakdown below its short-term moving averages. And look at the setup wise, the next support is around 2010, 2005. So overall, sense is that the bias would be negative. On the immediate side, 224 would be a hurdle zone. On the downside, the weakness can be seen toward 205, 208 levels. So overall, a kind of a sell on bounce counter with weakness around below 228 for a downside move towards 206 levels.
Okay, so that's on HUDCO. Kunal, talk to us about some of the top losers that we are seeing in the market today. Signature Global and BHEL, both down 10%. In fact, Signature Global is down about 11% as we speak. Good time to enter into any of these stocks?
So not for Signature Global, because the stock has confirmed a fresh multi-year breakdown. I think it's broken below the 2025 lows. That low was around 988 levels thereabouts. Today the stock has made a fresh low of 950. So, and that too on the back of much higher volume. So this could probably be an indication of a fresh trend on the downside for Signature Global. But I think BHEL could be an interesting case. I'm not sure why the stock has reacted by this 10 to 12% on an intraday basis. But then on the short-term charts, I think 260 is a good support point for BHEL. In case if the stock happens to come back to that kind of a territory, I would believe it's a good zone for a contra buy.
Okay, so that's on BHEL and Signature Global both. What about, Arpit, talk to us about the move that we're seeing on the flip side on some of the other real estate counters that are doing well for themselves. Sobha is one of them. We've seen positive updates coming in from this company as well. Talk to us about how Sobha and Oberoi Realty, the only other name from this index that's shaping up in the green. Now, Oberoi Realty has also seen its fair share of volatility in the recent past. Is there any strength on the charts of Sobha and Oberoi?
If we see overall the reality index from last almost 6 to 8 months, it has gone into a sideways corrective phase. Now talking about chart structure of SOBA particularly, if you see the setup on the monthly set, definitely very huge consolidation is going on in SOBA from last almost 6 to 7 months between 1440 to 1750 levels. Relatively in market carnage, the stock is still holding well and it has taken support near its around 50 DEMA, negating the formation lower highs. So definitely a risk reward is favorable at this junction with crucial support around 50-20 levels. The stock can head towards 1580, 1640 levels. If we talk about Oberoi Realty, relatively Oberoi Realty has been underperforming from last couple of months. However, look at the weekly setup, it is trading in a broader range between 6050 to 1750 levels. So I think the sense is that compared to both the counters, Showa Realty is definitely better place, and we can see much more better upside towards on the higher side for Showa Realty. However, for Oberoi Realty, the next upside hurdle would be around 1770 levels. On the downside, 1680 is the support zone.
Okay. Niva Bupa, Kunal, is that something that you track closely? I know you might not have a very long chart in terms of timeline, but how is this one looking? Just the volatility in the counter in a very short span of time since when it's listed is quite large. So I'm trying to get a sense as to what next for this one.
I think we discussed the stock yesterday when we were looking at the stock with potential breakout. 78 is a breakout point for Niva Bupa. We flagged off this level yesterday. Today the stock, I think mid-session somewhere managed to cross this hurdle point of 78, and now it's moving towards the next set of resistance. I think the next level for Niva Bupa on the charts where the stock could take some bit of resistance is around the 83.5 to 84 levels. That's where I think in September end 2025, the stock took a pause after a rally, and from there a next leg of a correction downtrend started off. So when the stock goes into a revival, the previous resistances, they become like a pit stop for stock prices, where there is a pause, some selling pressure which gets originated for the stock price. So would expect the stock to gradually head towards the 84 and a half kind of a zone.
Okay. Arpit, I wonder if you track any of the amine counters, because both of those are buzzing, Alkyl and Balaji.
If you see generally these counters are very much seasonal, and if you can see after a very sharp downtrend, both the counters have seen a sharp particularly if you talk about Balaji Amines, the stock was in totally downtrend for last almost 7 to 8 weeks. Finally today we have seen a sharp upmove from the lower levels, but if you look at the setup on the bigger time frame, still the stock is forming lower highs, low lows on the monthly and the weekly setup. So I think it's just a pullback move, and the level that we have to watch out closely will be around 1260, 1270 levels. If it manages to close above that, then only there will be a major change in reversal. But till then, it's just a sharp pullback move. So better to reduce your position at this junction and wait for a closing above 1260, 1270 zones for any change in reversal in this counter.
Okay, Mr. Subramaniam, we're just getting word from agencies that the Finance Ministry plans to scrap restrictions on Chinese firms for government contracts. Chinese firms can also now once again start bidding for government contracts. We're seeing some of the defense stocks heavily under pressure. Talk to us about what impact this could have, what kind of participation were we seeing earlier from Chinese firms? If you could just help us with some perspective there.
I think that basically it's a question that India's largest imports is from China. Okay, we already had a very long trade relationship with China. The Galwan episode and everything made us to put a lot of curbs and everything. And the second aspect is that the Chinese always have a tendency to dump stuff at low cost and make domestic industry less competitive. So these were the facts that were basically both a political and economic reasons that had driven a softer thing, a harder line on China. So now I think in the context of the realigning forces, with India being the chair of the BRICS, right? I think that some kind of a realignment and treating the political aspects separate from the economic aspects, but making sure that we can take advantage of the Chinese technology. The Chinese are far more advanced on AI and technology than us. And of course, they also have large volumes which give them benefits of scale. So I think in a tactical way, this shows a very pragmatic approach to the government that will allow them into some sectors where it can be a win-win in terms of the fact that we get semi-finished parts from them, finish it in India and export of India, especially in the context of the trade agreements India has signed with other nations, right? In order to supply those goods in a competitive price. I think some level of Chinese involvement, pharma, for example, you mentioned defense, but pharma also is a very key part where a lot of APIs come from China. So I think this shows that the government is making a more pragmatic move towards a realignment between the BRIC countries, and China happens to be obviously a very big part of that. So certain aspects of the domestic industry would naturally feel the heat and the pressure because their supply could be substituted with the Chinese supply. But on the larger context, I think our exports and everything could see a massive boost if we increase these kind of Indo-Chinese partnerships. And like they say, a very colloquial way to say, the elephant and the tiger have to learn to dance together. Or the dragon, if you want to use the word dragon. The elephant and the dragon have to dance together if they are to take advantage in this new Trump world.
All right. We'll see how much they can manage to do that over the next 3 to 4 years, Sunil. Kunal, with regard to some of the metal counters, those have been under quite a bit of pressure today. GMDC, Hindustan Zinc, NMDC, JSPL, Hindustan Copper are 5 out of the top 6 losers on the Nifty 500 index today. A possible advantage that one can take of the kind of move today?
Not really. I think it's better to wait because for the metal sector over here, because this is the first time where we've seen aggressive selling which is happening for the metal counters and for these select names. And generally we've seen that this could probably indicate that there's been profit booking first and then a mean reversion of sorts which could take place into the entire sector. And metal stocks in the metal sector have done phenomenally well from the December lows. I think the Nifty metal index was almost at 10,000 kind of a levels, moved up towards 11,500, 700 marks, so almost like a 15 to 17% jump in the metal prices in the metal index in the last 1 month approximately. So you're seeing some sort of a cool off which is happening into the metal index. Maybe another 3% to 5% cool off on the entire index is something which you can expect. So something which almost happened exactly like for the IT index, when the IT index moved into a strong uptrending mode. Post that, after a certain period of time, there was almost like a 5% to 6% kind of a broad correction for the index. Something similar is what I would expect for the Nifty metal index over the next maybe 1 or 2 weeks. So just wait and watch for the next couple of days. The price correction intensity has to cool down for these stocks to show signs of bottom formation. So we need to wait out for that point.
Okay, so that's the take coming in. But shifting focus, we caught up with the management of Senco Gold and Diamonds, Mr. Suvankar Sen, the MD and CEO, to understand the kind of growth projections for the longer term, because in their quarter 3 update, they did say that for quarter 4 and for FY26 overall, they're very confident of achieving the 25% plus growth on the financial year basis, which is a hike in their guidance that they had provided earlier. Let's go across and listen in to what's driving the conviction.
The sustainable growth rate, I think, is about anything between 20 to 25%. And if you must look at a long term. So, if we look at the correct perspective, the Q2 growth was about single digit, 8-9%. So it is somewhat that the consumers were wait and watch, and Q2 with all the GST decisions, the weather, and the festivities that will start from October, I think consumers were in a wait and watch, and you have to see it all together. So if you look at the YTD 9 months at 30%, that is more of something that should be in the mind of the investors, and I think a 20% plus is the kind of growth rate that one should look at. And going forward, assuming that Jan, Feb, March, we have Valentine's Day, Women's Day, the wedding seasons continue to happen. I think that is what is giving us the confidence that a growth rate about 20 to 25% will continue for the upcoming quarter as well.
Okay, Arpit, if I can come to you with regard to some of these jewelry-related plays, a Kalyan, a Titan, a Senco. How would you look at these on charts? Any of them which really stand out to you?
If we see overall from the gold finance space, as we have already discussed, the Titan would be a preferred pick. So as the market theme is, it's better to stick with the heavyweights as there is definitely a lot of volatility in the mid cap and small cap space. So Titan would be a preferred pick within this space. Looking at the chart specific, a very strong range breakout on the monthly scale above 3900 levels after almost 24 months. The structure of higher highs, high lows is intact. Though we have seen yesterday gap up opening, but the good part is that it is holding to its life high territories. And from here on also our setup is from next 3 to 6 months perspective. Definitely the stock can head towards 4500, 4600 level positionally. So Titan would be a preferred pick within the entire space, given the nature of the stock along with their setup wise. So it's a very strong setup with major support on 4000. The stock can head towards 4500, 4600 levels positionally.
Okay.
What do you make of some of the IT names on charts? Again, Tech Mahindra, TCS, and Oracle, a Wipro, all down 2.5% plus.
Yeah, today these stocks are down, almost reversing what they gained yesterday.
Yes.
But then they're still above their short-term support levels. So I think the Nifty IT index made a low 3 or 4 days back, or maybe started this week at around 37,300 levels, 365 to be precise in the spot zone. We are trading with a margin of almost 2 percentage points higher from that zone for the IT index, or maybe 1.5 to be precise at current levels. So till the time those supports are not broken, we may expect that this could just about be a zone where the markets are under pressure. And today all stocks, majority of the all sectors and majority of the stocks are into a selling spree. So I think that could be a pressure on that. But till the time those lows or the critical supports are not broken, we may expect the trend to continue on the upside.
Okay, we have an update coming in from wire agencies wherein we understand that the High Court has upheld Power Grid's move to ban KEC International from taking tenders for 9 months. Remember, a few weeks ago we did hear this, wherein KEC International said that Power Grid has barred them from bidding for any tenders for 9 months, and today the High Court has upheld this move. Very negative for KEC International, a 4% drop on that stock. The High Court is going to be hearing KEC International's plea on this matter on the 19th of this month. So it's going to be a very crucial development to watch out for. So yes, big cut coming in on KEC International. But that's on it. Let's shift focus and talk about some other sectors that have been in focus quite recently. Mr. Subramanian, what is your take on the auto space right now? A 1% cut today, but the auto sales number for the month gone by have been very robust. Do you believe the quarter 3 earnings are going to be as good?
Not as good as the top line growth.
Okay.
And the reason for that, I say, is that what I've seen, at least from my channel checks, is that some of the auto companies have had to pass on cuts to boost volumes more than the GST cuts, right? So there would be some pressure on the margins, I think. But at the same time, from a EPS perspective, the damage will be lesser because these are all high operating leveraged companies, heavy investment in fixed assets. So to that extent, any little bit of sales at a lower margin also could boost the EPS. So I think that overall, the level of increase that the sales increase is expecting from EPS may not happen, but still be a good, healthy quarter. And towards the end of the quarter, you will get the sales numbers for the year end. And as you know, depreciation for small businesses and all is a key trigger to buy auto related vehicles. So there would be again a boost in terms of the Feb March end kind of sales and buying. So it will be a quarter which will be a bit volatile in the middle of the earnings season, but should end well for the auto group.
Okay. Let's talk stock specific, in fact, within auto. Arpit, SML Isuzu, do you like the way in which the chart structure is shaped up and the kind of returns that it's given?
So if we see overall, the auto index has been a quite outperformer from last couple of months. And if you look at the auto ancillary, overall the setup has been quite strong. Today we have seen some cool off from the higher levels. But if you look at the setup wise, definitely a very strong setup has been seen. And if we see the setup wise, definitely the outperformance clearly seen. On the monthly setup, it has given a fresh range breakout of about 4,300 levels, 4,400 levels. And look at the setup wise, in spite of market turmoil, the stock is holding well. So look at the setup wise, a very strong base is formed near around 4,100, 4,200 levels. And the stock can definitely head towards 4,700, 5,000 levels positionally. So I think with the key support around 4,100, the positions can be hold for an upside move towards 4,700, 5,000 levels positionally.
Okay, so that's the take on SML, Mahindra, earlier known as SML Isuzu. But shifting focus, I just want to take a look at some other stocks that are buzzing in trade today. On the flip side, even though there are very less number of stocks that are in the green right now, it's India Cements that has seen a very sharp uptick, a 4.5% uptick on that one. Sobha, Trident, we've spoken about. Zensar Tech, you have Fact, Ipca Labs, IDFC First Bank, Dixon. These are some of the names that are shaping up well right now. Kunal, on the charts, any particular take on Ipca, IDFC First, Dixon? They're holding up quite well.
Yeah, so IDFC First Bank is something which I picked up as a BTSC trade because this seems to be a move which indicates that the last 3-4 days of that slight underperformance IDFC First Bank had, I think that could now get covered up. So we could be looking at a potential minor uptick. I will not call it as a breakout given the context of the market, which has been very, very volatile today specifically. Ipca Labs also I think is showing signs of a revival of sorts. The stock is confirming breakout the previous highs. 1540, 1535 was the previous high for Ipca Lab, and that too on the back of some higher volume. So after a gap of almost 1.5 odd month, the stock has managed to make a comeback and broken past about that candlestick high, which it had made in the month of November mid for Ipca Lab. So that's a chart which looks attractive so far, but we'll just need to be a little bit more alert with respect to the overall market volatility, because if this is the kind of behavior the markets exhibit over the next couple of days, then there could be a point that many of these potential breakouts could probably fail and these stocks may go back into a reversal mode.
Okay. Mr. Subramaniam, from the financial space, is the focus still on PSUs and PSU banks? Do you believe that they are still poised to outperform the private sector banks, or do you believe that we could see some churn internally?
They could see some churn internally. I think the budget is a key trigger there, because whether PSU bank mergers are in a big way going to be announced or not is an important event to watch out for on the budget. The second is that if you look at the GST play out, right, the initial half of the year is going to be auto and consumer durables. And the EMI related financing there is more of a private bank NBFC space. So you're not going to see huge credit growth from the PSU banks in the first half. Will be made up in the second half as you move into reality in terms of the housing sector, as well as then you move into the capex cycle starting. So again, my view is in the first half, private sector banks and NBFCs will do better. And in the second half, PSUs will again gather pace. PSUs still have a valuation gap with the private sector banks on their side. So even if you allocate PSUs starting from now, you still have a margin of safety. You can continue to accumulate, but expect a real bounce only in the second half of the year.
Very interesting. Okay. Kunal, let's start closing, and let's start closing with in a positive note. Eternal, 1.25% higher on a day like this.
There are not many positives. India VIX is up 7%.
Is that a positive? Is the question.
So if he's looking at only the percentage gains, then yes, maybe.
But Eternal is genuinely up. So trying to get a sense.
Yeah, so I think on the short-term charts, this could probably be a point where many of these stocks which have been beaten down earlier, they get a more of a reprieve rally. Where you see these stocks bouncing back, money being moving out from these stocks to some other name and such. So I believe that could be a case where you might see Eternal moving up higher. But the structural charts for Eternal are still on the negative side. I would actually expect that the stock may bounce back towards 290, 295, but that actually could open up a good shorting opportunity for medium-term traders. So one has to be very careful over here which leg and how much time frame or the short-term aspect one needs to participate on. If you're looking at this as a very, very short-term play, then yes, you might expect the bounce back towards 290, 295. But on the medium-term charts, the trend is definitely on the downside for Eternal.
Okay, so that's the take on Eternal. About 2 minutes left. Mr. Subramaniam and Arpit, thank you so much for your time today. We'll start winding down for the day, and let's take it across to Ashesha to do the same. Ashesha, very negative day for the market today indeed.
Well, yes, it was complete carnage on Dalal Street today. Nifty is ending nearly 275 points lower for the day, below that 25,900 mark. It broke that 26,000 and now it is ending below that 25,900 mark. Let's also put the spotlight on Nifty Bank. That was also under equal pressure today. Nifty Bank should come up for you on your screens. That one shared nearly 353 points, although it was outperforming as compared to Nifty. But despite that, 0.6% lower for Nifty Bank as well. Metal stocks clearly were under acute pressure today. Something like Hindalco was down 3.5%. Remember, Hindalco was the biggest loser on the Nifty 50 index, followed by Tata Steel, JSW Steel, JSPL, all of these stocks. In fact, Hindustan Copper and Hindustan Zinc were also declining anywhere between 3 to 6% in trade today. So clearly, we have seen a lot of pressure on all of these metal stocks in trade today. Let's also talk about some individual stock buzzers that were buzzing based on news. Balaji Amines, let's put the spotlight on that one. The stock was bucking the trend in an otherwise weak market. The stock is ending 15% higher in trade today, after the company said that they have received eligibility certificate under Maharashtra government's package scheme, and this will give them incentives totaling to about 260 odd crores. That stock ending 14% higher for the day in an otherwise weak market. Meesho, meanwhile, the stock was under pressure for the second consecutive day today. Nearly 2% equity lock-in opened yesterday. The stock ended 5% lower yesterday. Today also ending the day with a cut of nearly 4.5%. Something like Hindustan Zinc, remember silver prices are off nearly 10% from the record highs, and of course we have seen a lot of selling pressure in global commodity market. That is also the reason Hindustan Zinc is ending 6.5% lower in trade today. Viatech were back on the back of brokerage report that came in from BNK Securities, where they initiated coverage with a buy rating. 2208 is the target price, 1% higher for that counter. But remember, all of these export-oriented sectors and stocks were in focus ahead of that Trump tariff court ruling that is expected later tomorrow. So all of these textile stocks, shrimp exporters were in focus on the back of that. But yes, on the index level, Nifty is ending below that 25,900 mark, over 1% shaved off on Nifty. Nifty Bank also below 59,800 mark. So clearly it turned out to be a weak day on Dalal Street. Snehi, back to you.
Okay, Ashesha, thanks so much for taking us through that. So yes, the kind of weakness that we've seen in the market, a 1% cut coming in on Nifty, like Ashesha was highlighting. Kunal, any closing comments on the way today has panned out, that effect that we were talking about, a bad Tuesday and good Thursday, that has finally reversed after a lot of time?
You know, I was actually counting over the last 2 months how many consecutive 4-5 negative ticks have happened. You'll be amazed. I think there have been 5 or 6 instances where there have been 4 or 5 consecutive negative days for the index. So it's like we've been just, mired by this kind of a downtrend, and we've been maybe adjusting to this new normal, which is happening on the index front. But this is extreme volatility for the markets, because, to have an advanced decline ratio of 1:5 on such kind of a day when there is no major negative news flow across the globe, I think is something which shook the markets or took them by surprise. We've broken below the critical support of 26,000 mark. I expected that maybe 25,950 is something which the markets could hold on to, but we've given that by a margin of another 100 points. So if tomorrow also we see maybe one more round of sell-off, then we could be looking at the index going into a downward trend.
We didn't speak banks in the last hour or so. While the private sector banks held up fairly well, and it was a surprise, because while ICICI Bank has been in a league of its own, some of the other private sector banks have lagged, like an HDFC Bank. What can we expect from them?
So again, it's mixed. I would say it's just about balancing out the index, because HDFC Bank is still weak. The stock is seeing, I think, in the 4th consecutive day of price correction. ICICI Bank was on its own league. Kotak Bank, I think, largely was at 2140 levels thereabouts. So it was largely into a range of 0.5% to 1%. So was the case with Axis Bank. So I think no major change in terms of the bank Nifty or the private sector banking charts as such. But the concern is that how long can you expect that if the index, the benchmark index is going to a correction, how long can the bank Nifty go into a spree of outperformance? There's bound to be a point where an eventual pressure would come back into the banking index. So that's something to wait out for.
Okay, on that note, we'll wrap it up on this edition of Closing Trades. And just a few important things to note. The Bharat Coking Coal IPO opens tomorrow. Supreme Court is going to be weighing the legality of Trump's tariffs, but that, of course, the impact will be seen for us post-market hours. And, of course, you have Ireda, Global Spirits and Tejas Networks earnings tomorrow. But on that note, we'll wrap it up. From everyone that put this show together, thanks so much for tuning in. More news and updates on the other side of this short break.
Presented by AGS Federal Life Insurance. हर वादा मुमकिन.